Hello and welcome to another update video about gold. Gold is hitting some trend lines here at the moment that we want to talk about. Not that these are so relevant, but obviously breaks of trend lines could trigger temporary sell-offs. They wouldn't really change the Elliott wave pattern, but you know, some of you might use trend lines for trading. So I thought I'll share my thoughts around these trend lines here on the chart. Just need to redraw that properly here. So yeah, so I've got three trend lines that point actually to the upside. The lowest one here is not so meaningful at the moment. The second one maybe if the first one breaks, but this is really the one I wanted to share with you. This one here, which originates of the swing low that formed on the 14th of February here at around 2000 USD. So you can see that the market is pushing higher, okay, still, but has entered this consolidation, and we have pretty much 3, maybe even 4 touch points. So the market is currently consolidating. There's nothing clearly bullish there yet, so I don't have any confirmation of a breakout to the upside or anything. The overall Elliott wave pattern does suggest upside trend continuation, so we are overall bullish about gold. The most straightforward way would be obviously here to break higher, break above this descending trend line, follow the green line, go higher accordingly. However, we haven't really seen any clearly or any clear impulsive start from here. I would say if we can break above the red line, that would be a potential trigger to suggest that this fifth wave to the upside has started. If I go to the 4-hour chart, however, you can see this is not clearly bullish what's happening yet. And if we talk about the Elliott wave pattern in this correction, which I see as a B wave, I mean, I've labeled it as WXY, and then here this, I mean, even this Y wave, it could be something very complex that's going on here. I would not be surprised if you know, it depends on where the wave 4 bottomed as well. So we did say maybe the 4th wave bottomed here and the 5th wave is unfolding. Price action just doesn't make that very likely, but it's possible. This yellow line, as long as it's holding, that basically 2 conditions. If the yellow line is holding, we can take the view that the wave 4 already bottomed, wave 5 has started. It's just not very clear. We need some upside momentum, which could become clear, okay, or be generated, you know, upside pressure could come with a break above this descending trend line here. Only 2 touch points really, so not super reliable, but the market might get a bit of upside momentum if we can break above this trend line. It would be nice to have actually 3 touch points, but yeah, 2 is the absolute minimum, obviously. Just want to share with you, okay, this is a potential breakout line that I'm observing. This 4th wave has definitely done what it needed to do. I mean, it could extend, it could even extend into, you know, into a triangle. It might actually need a few more upside, downside squiggles. But I think a break to the upside, yeah, it would be definitely something to watch. So you could draw that on your trading view, I don't know, add an alert, and when the trend line is touched. Below we have support here, the previous swing low. I've just highlighted this in yellow as a support line at 2,285. And should we break below this green line, the ascending trend line, that would at least indicate that the upside momentum is not really there yet. And we might test the yellow line first. If we break below the yellow line, we might test the next trend line. Nothing of that would really be bearish, because the Elliott wave pattern tells us it is likely part of this correction. And down there we have the relevant Fibonacci levels. They really only start at 2,188 for a larger B wave pullback, that is, okay? Remember what we talked about? We said, okay, we are either in the white count or in the yellow count. In the white count, ideally, actually, the 4th wave is finished. If we extend this correction much further, it might be a B wave. Practically speaking, that doesn't really have much of an impact. The question is just how deep is the pullback going to be? Because if we drop below the yellow line, I can't really justify that this is still an unfolding 4th wave. It would then be the yellow B wave. But they are both corrections. That's the main thing. They are seen as corrective pullbacks with further upside trend continuation to come. I think that's very important knowledge. At least that's what the patterns suggest right now. That's the conclusion I have to come to. analyzing the Elliott wave patterns, which means that even if, for example, the trend lines break, if we break below the yellow line, it would not be bearish. It might lead to a larger pullback, but in an overall uptrend, and the overall upside trend continuation is suggested. So that's very important, let's say, context that we get here through the analysis. And also the movement since the swing high that formed in April is just corrective consolidation. It's not bearish. So I suggest we get further upside continuation. Ideally, we do it directly, okay, from here. But the important level that would need to hold is the yellow line at 2,286, and pay attention to the upper descending trend line there. Next upside target would be around 2,596. Now below the yellow line, pay attention to the second trend line here and the Fibonacci support area. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.